Okay everyone, it's almost 10 o'clock and we're looking at the pound on an hourly bar. You can see that the market pushed into the resistance area that I was talking about in the weekly wrap and really failed to rally, broke out of the downside of this pennant pattern that I've been discussing. You can see gave a couple of fairly good entries on the way down. This actually happened during the New York session today, the big break coming in right about 11 o'clock Eastern Standard Time. Later on in the day, after the Federal Reserve announced the cut in interest rates over here, you can see the market has really not done a lot. It did move down a bit, about 35 or 40 pips, and then popped right back up. So a fair whimper as far as the reaction goes. Let's go ahead and take a look at the daily bar. You can see here that the market has recovered off of this big push down from November and really is just kind of popping up. And if you remember when I was talking about the possible moves up, we're getting fairly close to a potential reversal area. Let me go ahead and put on my Fibonacci retracement here. And you can see the market pushed up, or tried to push up rather, into the 618 level. I'll go ahead and put the 50% area on here. You can see came right into the 50% retracement and then started to drop off. So the retracement was a quote-unquote normal one, and really unless the market can now break above the 61% retracement, the trend for now is down. In spite of what everyone is saying about the U.S. dollar being weak, I think we have reached the point where everybody's bearish on the U.S. dollar. And one of the signs that the professional money is active is when you see the public and the news media all pushing in one direction. It's no different when the bull market was raging. Everyone was bullish. The public was finally bullish. Massive amounts of capital were coming into the mutual funds, and then shortly thereafter, everything turned around. It works the same way in the currency market. The professionals want to push price as high as possible in order to sell to individuals so that they can either liquidate longs and or go short. So here's where the pound is sitting, still in the downtrend. We'll go ahead and take a look at this. Here is the trading lane. You can see not as symmetrical as we would like. The market's got quite a ways to go up here before we've got a solid trading lane to the downside. Really what we're looking at is the market trading into more of a longer-term pennant pattern. As I zoom out, you can see that this pennant's going to be about a 3-month-old one, pointed aggressively down it back into this support area. Although, again, we've got to remember what we've been anticipating are these breakouts where the market will pop up out of a resistance zone and then form a flag or a pennant back into the resistance zone, or support zone. Very, very common. And as you can probably tell from my analysis, there's really nothing going on as far as setups. Let's go back down to the hourly bar. You can see here that the market, after it slid out of the pennant pattern or triangle pattern here in the early morning hours, really just has slid off back down into this support area here. We've got to watch this 300 level for the market to consolidate, possibly start moving up. So I would anticipate the market moving into another pennant pattern or triangle pattern down here, getting ready to make a break one way or the other. So if you weren't able to capitalize on the reversal up here, just keep your powder dry. There more than likely is going to be an opportunity at this 2.03 100 area up to about 2.0354.